Nick, it is so good to see you. Let's get right into the headlines. How do you know your advisor is working for you? And I'm asking because of this. Recently, a financial advisor in Georgia pleaded guilty to one of the state's largest Ponzi schemes in history,
Ooh.
defrauding more than 2,000 investors out of roughly $380 million. So, what are the key signs that a financial advisor is acting in their client's best interest? And how does the fiduciary standard play into this?
Oh, wow, that's huge. What'd you say? 2,000 investors and $380 million
It's a lot of
in
money.
a pyramid scheme, Ponzi scheme.
Mhm.
Whenever, and it's scary because just like when I was picking my doctor, I had to make sure, and I had to go through and do research and interview and make sure that this person was legitimately a good doctor, because there's good ones and there's bad ones out there. Just like a financial advisor, it's like choosing a doctor. It's like choosing a pilot. If you could choose the pilot for your plane, you just hope that the airlines actually vet the person the right way, and that person actually has done all the stuff that they can do to know how to fly the plane, and that's all good and stuff. But I can remember a situation where I had a client who called me up and said, "Hey, Nick, I'm going to be moving my money," and I kind of, it was a real shock to me. And I asked, I said, well, fill me in, what's going on? How can I help? How can I serve you? And he said, well, I met with this other guy, and we were having food at Arby's, and he said that, I should move all my money over to him, and he has a 15% guaranteed plan. Well, a couple things in just that comment kind of,
Yeah.
number one, 15% guaranteed returns. And number two, he met a guy in an Arby's.
Hey,
And so
it's the roast beef is pretty good, Nick.
it is pretty good. But I mean, that kind of told me a few things. So I said, well, hey, fill me in. Let me figure out where this money's got to move. Where did he tell you to move it? He said, well, he has his own account. I said, really? What's that? He's like, I said, is it going to Fidelity? Is it going to Schwab? Where's it going? He said, no, it's going to his own account. So again,
Yeah,
that was number three. So I
right.
said, well, what's the address? And this is actually in Cincinnati. And I typed the address in, and you know how Google will take the little thing, you can actually go down to the street level
Yeah.
and you can look at where the office is. It wasn't an office, it was this weird looking house on a corner. And when I did some more research, what I found is this person had moved 3 different times. And so I gave the advice. I said, I would not move it here. Here's the reason why. Doesn't really look like, I said, number one, these are IRA accounts and they need to go into your own IRA. You can't take money out and dump it into somebody else's account. And so, long story short, he ends up not moving his money. Yay. And about 6 months later, it makes the news that, in fact, this
Hmm.
person was running this Ponzi scheme and they were shutting him down.
Right. Right.
And
Yeah.
so I say that because your question was, how do you know? And when I talked to this guy after the fact, he said, I just thought there was something weird, but I wanted to believe 15% would happen.
Right.
And
And
that's
that's
just,
what it comes down to. We want to believe that. Yeah.
we want to, but
Yeah.
then the reality is something different. So the big word here is fiduciary. Legally, which means if you have like a Series 65, an investment advisory license, and you actually have the license, not just saying I'm a fiduciary, but you actually have the license, what happens there is you're legally obligated to put the client's interests ahead of your own. Now, some people will go out and just say, well, I'm a fiduciary, but they just call themselves that. There actually is no licensure behind it or anything like that. Think about it this way. Doctors have Hippocratic oaths. And so that's what a doctor follows. Well, in the financial world, it would be fiduciary duty is what it would be. A fiduciary advisor is going to be like think about a caddy in golf. You would hope that caddy wants their player to win and will make recommendations on the club to pick for their player, irregardless of whether that pulling that club out of the bag and picking this one over that one is going to make them a commissioner or not. So a couple things that you can do to make sure that you're mean and working with the right person, make sure they have a heart of a teacher. If somebody brings out a pitch book immediately as soon as you sit down in the chair, you probably know something's not right there. So you want to make sure that they're doing that, that they will build a plan, not just push a product, that they'll tell you the pros, the cons, and the strings attached. a whatever investment that's out there, that they create solutions to your financial problems, not just sell you another product. Or another way to look at it is, are they talking about just investments, or are they also looking at everything else about you?
Right.
Maybe
That's a
it's
really good
your
point.
income planning, taxes, healthcare, estate planning. They're looking at the whole
Right.
picture.
Right.
And that's how you can kind of know, because if they're really pushy on return, return, and return, and not talking about the risk behind it, then that might tell you that something's a little off.
Right. Well, let's just kind of talk through this example then a little bit more, Nick. I heard you say two things, but
Mhm.
what questions should that person or anyone ask when they are interviewing prospective advisors? I heard you say two things. Number one, are you a fiduciary? Do you have the
Mhm.
license? Number two, who will be the custodian of the money, right? What else?
Where are my assets held?
Yeah.
And I don't want to. That's huge, because if we look at almost every Ponzi scheme, Bernie Madoff as an example, people put money into Madoff securities. It didn't even go into like your own brokerage account. The money was held in his own account. There was another guy in the Midwest. He was making people write checks out to him into what went into what was called an IGWT trust. And when they took him to court and they tried to find out what IGWT stood for, his Ponzi scheme was running out of a trust, IGWT, which stands for In God We Trust. Can you believe
Mm.
that? So you just got to make sure that you have actual account numbers, that they're held with third parties. Is it Schwab? Is it Fidelity? That you have actual account numbers, not that you're making a check out to John Doe, Jane Doe, whoever it is. You got to look at what licenses they have. Are you licensed? Do you have a designation, a license to do? Are you duly licensed? Check them out on FINRA. You can go to FINRA Broker Check,
Yeah.
and you can check out to see how somebody's doing.
Yeah. Get
So if somebody,
references too, right?
you can get references. A lot of times people will say, well, but I see reviews online. They got a lot of reviews. Well, you don't know who they may be paid
Be a
to get some
bot.
of those reviews.
Yeah.
It's the internet, right? So you can't really control all that. And then maybe just be part of their culture. If a group like that has events with their existing clients, maybe say, hey, can I come to one of your client events and get a chance to meet some of the people that actually already work with the firm. That's how you can have a pretty good idea of what's going on and how they work and things like
Right.
that.
Right. So, how should an investor interpret promised returns, especially when someone uses the word guaranteed or promotes consistently high returns?
Who's it guaranteed by, right? That's, to me,
God.
is right. Not going to work right there. Is it, how I look at it is it guaranteed by an individual or an institution? If it is not backed up by an institution, that's not a guarantee. And there's only three entities that can do any sort of guarantee. Banks can guarantee certain things, their CDs and things like that. Guarantees can go to the government because they can do things like treasury bills and say we have guaranteed treasury bills or guaranteed bonds. Insurance companies can have guaranteed or principal protected annuities backed up by the claims paying ability of the insurance company. So you have an institution backing them up, not an individual. So if an individual comes out and says, yeah, I guarantee 15% returns, like he did in that case I was telling you about earlier, that is a pretty sure sign that it's somebody making that claim. It's an individual, not an institution. So that's and if somebody's promising you all these returns, but not talking about the risk, that might be something too that you got to be careful of. I'm always saying that you need to look at what the guarantees are in writing. And know what's going up and know what's going on, because if we think about the stock market, it goes up and it goes down. Nobody can guarantee anything in the stock market and say
Right.
it can never go down. It's just, so
It's
that's like saying
guaranteed
that
to
in
go
Vegas
down at some
that you can
point.
never, I'm only going to win in blackjack in Vegas. I'm never going to lose in blackjack in Vegas. Okay. That, again, warning signs that you need to be aware of.
Right. So, as you're saying too, transparency is crucial, also part of the fiduciary standard. How often should clients expect performance reports and updates?
People should have online accounts now. So if you think about Fidelity and Schwab, you have, or those companies, there's other ones out there. Those are the two major ones. When you have accounts there, you have access to it. You can see things. They do monthly reporting. If you think about treasury bills, sometimes that's a little bit longer term when they do reporting. Insurance companies, might, or CDs in the bank, that might be maybe quarterly or maybe annually on some of those, depending on what it is. So it depends on the investment of when you would get reporting. But you should always look for three things. Where's the money held? Make sure it's with an institution. You should always find out what's it doing and what's this costing me when it comes to transparency. At a minimum, like I said, everything should be coming out monthly, quarterly. You should do that. You should have annual reviews with your advisor so you know what's going on. You want to make sure that when a change is made that you're getting transaction notices. Now, I know that can clog things up. Everybody's like, well, I get a lot of mail. Yeah, but if there's an interest dividend paid or if something's getting bought or sold, you need to be aware of that. So don't look at that as a bad thing. Look at that is transparency so that you see what's going on. But transparency is beyond just the performance. I think a lot of people, they look at it as it's just performance. No, transparency can also have to do with fees. A lot of people think, I have zero fee. I have this mutual fund portfolio over here. I'm not paying anything. Well, that's not necessarily transparent, because sometimes those wirehouses are not showing you all the other layers of fees that are underneath that you don't see. Like in a mutual fund, it might be like a 12B1 fee or a platform fee or trading cost fees or revenue sharing or advisor payouts. You have all these fees in there. It's not unusual for us to peel back the onion on like a mutual fund or something, and somebody who thought they had a 0% fee, they're paying maybe 1.8, maybe 2%. Or they'll have maybe a variable annuity, and there's admin fees and fund fees and turnover fees and rider fees. And you tally all that up, and maybe they have 3, 4, 5% in fees on that plan, and they had no idea about it. That's a lot like, when we fly and we go out, and I see those ads for like $39 airfare. But once I actually make my ticket, pick my seat, get my bag and everything else, that $39 ticket's like $350. I thought it was almost free. But then when I saw all the hidden stuff after all that, not so free.
Right. So, Nick, if an investor suspects something is off, what are the practical steps they should take immediately to protect their assets and get clarity?
Well, the first thing is, don't just stick your head in the sand and say,
Don't hope.
oh,
yeah,
that must not be me. You got to take action. So a couple things. Number one, request that you have a full account summary of what's going on. So you get your full account statement, verify that your assets are actually at a custodian. You'll see I kept coming back to that 3, 4 times, because almost every Ponzi scheme is where money has gone to a person who's put that money into their own account and giving you like a fictitious statement. Going back to what you said about statements, I've seen people that will come into my office and say, oh yeah, here's my account. And it's like a Word document with numbers on it. That's not a statement. The statement's got to come from a company that has their actual information on it.
Mm-hmm.
So you want to make sure that you're getting a statement is a statement, right? But you got to verify those assets and then consult, get a second opinion. Say, hey, I don't know what's going on here, but I need you to look at this and see if it's legitimate. Heck, people can call us here at the office and we can actually sit down. I mean, although we're here in Central Florida, it doesn't matter where you are in the country. We can set up a 15-minute chat or a virtual Zoom meeting and look at your statements and get an idea of what's going on and where your money is and if it's legitimate or not. That way it's not a mystery novel that you don't know what to do and you're scared about it and you don't know who the villain is. It's a situation where you actually know, okay, I had this vetted, it's okay. Or I had this vetted and my money's in Mr. XYZ's account, not in my own. That's when it gets really scary.
Right. This was such a valuable conversation, Nick. And like you said in the beginning, kind of making sure that your advisor leads with the heart of a teacher. That's what I really appreciate about having conversations with you. And I always feel like if somebody is getting defensive or weird when you're asking them probing questions, as opposed to like really sitting down and making sure you understand it, that's also a red flag. So again,
For
thank
sure.
you. Yeah. If somebody would like that second opinion, or again, just making sure that, just a good relationship with an advisor, and you should interview a few. What's the best way to reach you?
Go to our website, group10financial.com. Set up a 15-minute strategy session call. You can see right on our website, there's a calendar. And you can click the link and you can set up a quick 15-minute strategy session call just to see what's going on. If there is something going on, now would be a better time of finding out if there's something wrong than finding out about it after it's in the news.
Right.
You might be able to do something about it now.
Yeah.
And we might be able to help. So give us a call and we can see if we can serve you and help you.
Right. Nick, thank you so much.
Great being with you.